Good morning, traders. Welcome to today's Trader Days on Signal. Uh, Without delaying ourselves, let's go right into it. So, okay. Yesterday we talked about this, all these levels and some reactions we are anticipating in the market. And at the same time, we talked about structure and we did talk about these levels here. And I gave two conditions that we should be expecting yesterday because we are actually within this line when I was doing my analysis. So and I talked about this particular level on 1 hour, this Asian high, and I said if price should close above it, then we are anticipating buy in the market. And I talked about this particular level also. We can be anticipating some kind of reaction. We didn't see any reaction, then we allow it to flow. And I highlighted this level and I pick this high and low as our dealing range. And I highlighted the fact that, okay, we have a proper mitigation of the level coming from the highs because we have this upsurge and immediately we have a double imbalance within the level. And at the same time, we have a proper mitigation of the 50% of the range coming down. And at the same time, we have another block here that we can be expecting some price reactions from. So all this I did note out yesterday. And more so on 15 minutes, I picked this level for us, this particular leg here, this particular candle. And I did highlight it that we can be expecting some kind of reaction from the level also. Before we would have picked the whole level, and tried to sell from the area aggressively. But over time, all those aggressive trades tends to give us more something and affect our probability game, our numbers game rather. So I decided to kind of, wait for internal liquidity before we go all out on either buy or sell. So therefore making us to have this kind of trade ideas here. So, and I figured yesterday, immediately after dropping to something, we didn't have the kind of reaction we are expecting from this level. And we see the fact that, okay, price just go high into the level. And we have some kind of manipulation within the leg and internal liquidity was taken. And it was an opportunity for me to kind of what? Sell the market all the way down. And I entered the trade 2 times just to capitalize on the whole something. Even within this leg, me pointing out on 1 hour that if we close above the high, that we should be looking for buys. This high level, we should be looking for buy. And yes, also I followed it. But when I checked through the 4 hour, I noticed that we did not really have a closure above the level, which means on higher time frame, our structure holds. So we have the turtle soup above this high, major turtle soup for that matter. And we have this particular low here to be our, what is it called, weak low, our weak low. And here automatically turn to our strong high. So having these levels within the market, automatically we are expecting a closure on 4 hour or major structure above the level. Even though I followed the closure on what is it called on 1 hour, it was a very plain closure, and we have this kind of candle within this level. So I was expecting that we're going to buy, and I did pick a trade of buy anyway within this level, and I tried to buy into the highs, into all this imbalance that we have here, double imbalances that we have here. But having coming from the left side of the something, we can see this level. Not it's not that it's not properly mitigated, but there should be proper mitigation of the 50% of our dealing range. And having that, coming from the 50%, and this candle properly mitigates the 50% before creating the second part, the premium side of the 50%, I mean, of our dealing range, then automatically we know that the candle might, is probability game. So we can be using the word assurance. So anything markets can do whatever. Even within this leg, it's generated a normal internal structure for me. I mean, internal liquidity more than the sell anyway. So the sell was just based on other kind of something, because the kind of liquidity I'm expecting, I don't expect a deep closure into the level. So, but having this 1 to 5, double 1 to 5, which is giving me 10 return for the two losses that I had here, still made over uh 8% gain from the something. So that's about that. So moving forward today, we can see that we now have money has been transferred from this eye into this eye. So the only thing that can make us, here now automatically becomes our strong eye, and we are expecting price to be rated below this low. So on 4 hour, this is 1 hour anyway, but we already know that's what is going to be, and this will be our week low. We are anticipating external liquidity to be taken from within this level. So if we look at 4 hour clearly, we will see that okay, a new what is it called? A new dealing range has been formed. So if we have a new dealing range in the market, you know, we've got to anticipate the 50% of the something. So two things we are expecting today. Are expecting this morning. Excuse me. So we have two expectations today. So since we've picked our dealing range and we know that here is the strong guy that are expecting to be protected. So we have two things to deal with today, in the sense that with the way market is reacting, and today being Friday, if we look at daily, we try and see that okay, the price action is bearish and anything can happen within the market. So we try and play accordingly on lower time frame. So two things we are expecting. We are expecting a proper mitigation of the 50% of our dealing range into taking out the external liquidity. But nonetheless, that's expectation number one. Expectation number two is the fact that we can go ahead and create a market structure shift on either on 4 hour major structure or on 1 hour. And that alone, this structure shift can kind of, if we break above this level and we didn't properly mitigate this leg here, can give us some kind of reversal into the highs. But nonetheless, we have two things to be anticipating. And this leg here, where the expectation for it to validate that we've gotten an MSS is the fact that if we close above this high, just like yesterday. So if we close above this Asian high into this level and we didn't see any proper, any kind of reversal pattern within the 50% of the Asian range, of our daily range, then automatically we know that we can be anticipating and expecting that we're going to kind of, go into the highs. But nonetheless, since we have this kind of expectation within in place, we have this MSS there. Well, our expectation number one is to be anticipating price to kind of mitigate our 50% dealing range and comes to take external liquidity on within this leg here. But we are at the close of the week, today being Friday. So anything can happen. And as you can see, this type of rejection we're having from the highs. So looking at 4 hour, these are our two expectations. And if we look through, we have this liquidity void here. Here's a liquidity void, that lies perfectly on our what is it called? On our 50% daily range. So we can be expecting price action directly from this particular leg here, this particular level. And when we check through the level, what can we see? The only thing we can see within this leg is kind of, the internal structure within this level. So we can be anticipating that the liquidity void will just be tapped and price being sent lower. But if we check through this level here, we can see some kind of reaction, but, let's stick to the right side of the market. So we can be expecting price action, price reaction from this level, and this MSS can kind of, because we didn't have the external, let's assume we have external liquidity before the internal liquidity, then this level will be threatened. But for the fact that we don't have any, we are yet to take this liquidity before going into the highs, then automatically we're going to be expecting that the direction of the market here will continue to hold. So two expectations we have from the market, which is number one, price trading back into this level to give us a proper mitigation of our daily range. So from within this level, we're looking for sell. And if peradventure we close above this level into the highs, then automatically we know that we can start looking for buy. But nonetheless, since we didn't have the external liquidity being taken before going into the 50%, then we can be leaning toward this level being higher probability. So if peradventure this external liquidity was taken before the internal liquidity, then this leg is being threatened, and here will be our profit target. Or if peradventure we didn't close above this level and we manipulate into the 50% of our daily range, then here will be our profit target and we're coming down. So that will be our analysis for today. And we're going to be taking trades either from this level, or if for adventure this level is being taken then into the highs. So those are the two expectations that we have, at least for today. So thank you very much. You can just, you know what to do on lower time frame, I believe it. So we will continue from there tomorrow. So this is the trade that I took yesterday, and you know it played out perfectly. And this is the type of trading I'm kind of doing now. I don't want to be in it before. I don't have enough time to sit with system and be analyzing on lower time frame. But now I just want to reduce. It's something I've noticed that in the past, in our first 90 episode, we take trades that last more than, that last for days. And that I really wanted to stop. I want to kind of lean toward day trading. And if we are versatile with trading, in trading, there is no type of trading you can do. You can do position trading, you can do swing trading, you can do day trading, you can do scalping. And as you can see on this particularly on even on weekly, we've been our from this internal structure, we've been have given a signal that okay, we can be expecting higher prices on Euro USD. And from this level, if not for the fact that trading what is it called profit, I've still been in within this trade anyway. I'll still be within this trade. And if you miss this opportunity, I came back and told you from this uh candle that we have here, we can be anticipating another buy for position trading, wherever it comes on, we are on it as a trader. So we have that, and but for now, just for us to be having regular trades and maximizing our time in the market, be sticking to lower time frame, and that's the reason why I'm not giving all those aggressive trades any longer. So I just want us to be giving the trade ideas and signal in form of where to be expecting some kind of reaction from. And when you see what you are looking for from within the level, like this liquidity void, if price come into this level, we are anticipating some kind of pattern or whatever price action that we can capitalize on and send price lower. Then if for adventure this level is being taken, giving us all the expectations and now to quickly maximize the price action. And if for adventure we didn't have any type of price action from within the level, then we are safe. And if you really want to take an aggressive entry, you can go for this whole range, this liquidity void, and still capitalize either on 1 to 3 or 1 to 5, regardless. So depending on your risk management. So that will be that, at least for now. But that's my own something. So we'll continue from there tomorrow. Thank you. Have a profitable day.